On to Nigeria now. The central bank has raised its main policy rate there by a much smaller than expected 25 basis points. The acting central bank governor, Folashodun Shonubi, said that a moderate increase will help to anchor inflation expectations while continuing to support investment. Now, the decision to raise the bank's monetary policy rate to 18.75%, this is the first since President Bola Ahmed Tinubu suspended the central bank governor, Godwin Emefiele, back in June. Emefiele had used a much criticized system of multiple exchange rates and a highly interventionist policy to keep the country's currency, the naira, artificially strong, and he also lent directly to businesses to try and boost flagging economic growth. The central bank raised its policy rate by 50 basis points in May. That was the last monetary policy meeting that was chaired by Godwin Emefiele. All right, then let's bring in some analysis for you on this story. Let's bring in Owolabi Samson. He's an associate in research and portfolio management at the Lagos-based firm Zedcrest Wealth. Samson, thank you very much for your time this evening. So the policy rate going up by 25 basis points in today's meeting, was that in line with expectations or much lower than expected?
Okay, so thank you very much. Concerning that is in line with expectation actually, and because analysts have been pricing in like a 25 to 50 basis point hike in interest rates, and this is not far-fetched based on the fact that we have inflation rates at 22.7%, 79%, which is approximately 22.8%, and we it was from 22.4% last month in May. We can also see that we have the prices of foods have been rising significantly over time, and also when you look at the money supply, you see our money supply reaching an all-time high of 3.4 trillion naira. So this shows that we have a lot of money in the economy, which is also like a major factor that is driving inflation upwards. And this robust liquidity in the financial system is also a major issue. So this is one of the major reasons why it is very, very important and pertinent to still increase interest rates.
So what do you expect moving into the second half of the year? Should we expect a mix of more rate hikes plus perhaps more reserve requirements, or rather the central bank raising reserve requirements for banks in order to deal with that liquidity problem?
Okay, so concerning that, I think that at this moment, the CBN needs to look into the financial system and also find a way of using other tools and other means to curb inflation, and also to look for a way to reduce the financial system liquidity, because hiking interest rates is something that we've been doing over time. We've seen major economies around the world hike interest rates, and we've been seeing this disinflationary trend in their economy. We've seen this inflationary trend in the US and the UK, and also in the European Union. However, in the case of Nigeria, even in the case of Nigeria, we have been seeing inflation sustaining its uptrend. So I think the CBN needs to look at it and also find other means and other ways to curb this inflationary trend. And when you look at the fact that we've removed subsidy and also the unification of the FX system and the liberalization of operations in the markets, you will understand the fact that we are at a situation in which we have a change in policy, which is going to significantly change the trajectory of events in the market, and it's going to cause inflation to sustain an uptrend. So we need to look at other means and other ways of to reduce inflation. However, I do not see the CBN cutting the interest rate anytime soon. I do not see them cutting, saying they want to maybe take a whole decision right now. We might still see further hikes in the year, which is very, very important.
All right, and so I'm glad you brought up the FX question, because the MPC says, the central bank has been intervening to temper volatility in the FX market. But what else needs to be done to close the gap that we're still seeing in the rate between the rate in the formal market, which is around 790 naira to the dollar, and that in the parallel market, which is roughly 870?
Okay, so concerning that, one thing and one major factor that have been driving the gap between the parallel markets and also the IRNI window is based on the fact that we have a lot of backlogs of demand for FX that have not been let's say, that have not been treated. So these backlogs, through the liberalization, we have been seeing this backlog trying to be attended to. However, we are still seeing more demand in that space. So until we have attended to the backlog and we have have cleared the backlogs and we are seeing more foreign portfolio investment, that is when we are going to see a shrink in the gap between the I&E window and the FX, the parallel market rate. So one thing that the CBN just needs to do right now is to to cater for the demand, look for ways to improve portfolio investment, and by doing this, we are going to see that things are going to moderate later on. However, in the short term, we should still expect that gap to be widened. This is something that has happened in some other countries whenever they embark on a policy of liberalization of the FX operations in the FX markets. This is something that has happened in the countries like Egypt before. So if this is something not really let's say not really new, and it's something that is supposed to be expected. However, in the long term, we might see that particular gap shorten when we have attended to all those backlogs.
All right, then. For the benefit of our audiences who may not be familiar with the acting governor of the CBN at the moment, Folashadun Shonubi, could you give us a sense of who he is and what his approach to monetary policy is? Is he likely to steer the CBN back to a more orthodox, conventional path?
Okay, so concerning that, what I would just say is that when I checked his profile and made some research concerning him, I've seen that he's a professional and he has over 30 years experience in the financial services sector, and he has worked at several financial and private institutions over time. And when you look at what happened today and the major decision of the Monetary Policy Committee, you realize that they were still more tilted towards the orthodox way of hiking interest rates, and the only major factor that was changed today was the fact that the asymmetric corridor, they made changes to it from the plus or minus 100 to 700. They changed it to plus or minus 100 to 300 for the SDF and SLF. So when you look at this particular factor, it's still in line with what has been done over time. That was the only thing they changed. They were still hiking interest rates. So I believe that it's still going to follow the normal orthodox way and the traditional way that we have been doing things over time with just a little bit of slight changes, but it's still going to be more tilted towards the orthodox way of doing things in the Nigerian economy.